Welcome to Wealth Building Through Real Estate. I'm Dusty, your guide to the ever-evolving world of residential real estate. Today, we're diving into the latest market trends from November 24th through 30th, 2025, and exploring how they might impact your wealth-building journey. First, let's talk about mortgage rates and financing costs. Over the past week, we've seen a notable decline in average U.S. mortgage rates. As of November 24th, the average rate for a 30-year fixed mortgage was 6.28%, while the 15-year fixed hovered at 5.40%. By November 30th, the 30-year fixed averaged slightly higher at 6.10%, which is still quite attractive compared to recent history. Adjustable rate products have seen mixed movements, with some decreases and some rates standing firm. Turning our attention to sales activity, existing home transactions in October reached an annual rate of 4.10 million units, marking a 1.2% increase from the previous month. This is the strongest sales pace since February. Year-over-year sales are also up by 1.7%, especially in the Midwest and Southern markets. Interestingly, the West continues to lag due to elevated prices. Inventory, meanwhile, experienced a slight drop from September, but has increased significantly year over year, offering a 4.4-month supply, still short of the balanced 6-month norm. Home price trends are another key focal point. On a national scale, the S&P Coastal 80 U.S. National Home Price Index indicated a slowdown in annual price growth to its weakest since early 2023. High borrowing costs and affordability issues have been dominant themes. All major metro areas saw month-over-month declines, with Tampa, San Diego, and Seattle leading the downturn. However, the 20-city composite reported a modest 1.4% year-over-year rise, signaling a broad-based cooldown. The FHFA reports a 2.2% rise in house prices from the previous year. While monthly growth has stalled, the baseline conforming loan limit for 2026 will rise, ensuring broader mortgage availability. Regionally, the Northeast and Midwest enjoy cooler price environments, empowering buyers. In the South, housing affordability supports sustained demand, even with flat prices. Meanwhile, the West faces elevated home values and tight supply, impacting sales. For those considering real estate as a path to long-term wealth, the current landscape offers mixed opportunities. Lower mortgage rates improve cash flow, but slower price growth and high entry costs mean careful planning is essential. Patience may yield bargains, especially in regions like the Midwest and South. Looking ahead to the first quarter of 2026, industry forecasts suggest a modest pickup in home sales, with mortgage rates projected to hover around 6% and inventory levels remaining high. It's a promising time for middle-income borrowers. Analysts predict national sales growth between 1 to 3% next year, with price appreciation settling around 2 to 3% annually. Continuous monitoring of Federal Reserve policies and market trends will be key to maximizing real estate's wealth-building potential. And that wraps up today's episode. Remember, when the dust settles, only the truth remains. Thanks for joining me, Dusty, on another insightful journey through the world of real estate. Until next time, stay informed and seize those opportunities.